Hello everyone and welcome to Marline Training's Taste. I'm delighted to see you again, trader to trader. We're taking stock of the latest market news, trying to spot areas that might be interesting in these bearish markets. We've returned to Monday's lows. Every time Donald Trump intervenes on a Monday, he tries to reassure the markets. We've seen an extremely strong surge. On the indices, we gained nearly 750 points on the Nasdaq, and this Friday, we've lost those 750 points. We're back exactly at the same strategic level as Monday. So be careful. Perhaps at these levels, Donald Trump becomes the buyer, and he'll come out with one or two great lines during the day, which could send the markets back up. There you go. We'll see if he does it again. A crowd, and to say a second time, or rather, let's say a 37th time, that might be a slightly more reasonable estimate. Let's take a closer look at the markets. Then I'll show you my little frustration from last night, because let me remind you that trading is above all about constantly managing your frustration. And at the moment, I must admit, I'm managing my frustration well. Come on, but have a look. As you know, I love levels. 750. I often mention it to you on the Nasdaq. And we started to drop following a surge at the close of the European markets, a decline, and I was lying in wait, so at 750, and I mentioned it to you yesterday. If you can buy at 740, that's really the best of the best. Reintegration were around 760. If it starts to rise again, it could make your day or even your week. So we get here, it's dropping gently, I'm waiting, I'm drinking my Japanese green tea. Of course, otherwise it's not green tea, and we end up here, more or less. Around 760, 765, the ideal scenario, a slow but perfect drop. Some of the candles, El Kanashi, are perfect. Everything's fine. And then at 9:10 p.m, so 50 minutes before the close of the American stock market, a statement from Donald Trump sends the markets back up. Spectacularly, we hit the 24,000 point mark. I'm not going to tell you what he said, it's always the same thing, alright? Always the same thing. The problem is, it always has the same effect. So after a while, there's a risk of developing resistance, a bit like with antibiotics at least. Ah yes, the market went back up. And then that was it. I said, okay, I'll leave it from here. Although I did take a little bit on the way up there. It took off so quickly, but it was ridiculous. I must have made, I think, 15 points I got in, and it just kept shooting up. I saw a figure that looked decent enough. I cashed in, clicked the button, and it kept on rising. It was far too much. Far too tense. Far too volatile. It could have dropped back just as quickly. In fact, as proof, at one point, it started dropping again for me. So there you go, my level was 740, 750. It was a close call. If Donald Trump had spoken at 9:15 or 9:20, I'm convinced we would have had it. We'd have hit it, I'd have been in position. Maybe we should make the most of those 250 points. Well then, there you go, frustration. So after that, I didn't do anything. There you are. Normally, 15 years ago, I would have been frustrated. I would have started scalping like mad in that area, telling myself it's so unfair. I would have gone into Calimero mode. It's so unfair, blah, blah. I've been waiting for 2 hours. And then it started to rebound strongly, just a few points from my entry target. Right, there we are. I've finished my green tea. I've had a coffee. And I said to myself, right, let's go and watch something daft on the telly. And I can tell you, it really was daft, because this morning, I can't even remember what I watched last night. It's not Alzheimer's, it's just that it doesn't feed me intellectually. So it must have been something very reality TV, in my opinion. And there you go. So I'm going to refocus again on this area here that we haven't touched. Come on, 740. I'm not too convinced, because we're at the bottom of the range. As you can see, we're at the bottom of the range. The bottom where Trump made some cracking statements, which allowed us to bounce back in an extremely sharp manner. Across all the indices, here we're looking at the Nasdaq, but it applies to all the indices, and we find ourselves exactly at this point, in this same area. So perhaps an attempt at a rebound. It will really depend on the news, which is extremely busy and extremely tense. Now, regarding this extremely tense and busy news, it's exactly the same as yesterday or the day before, so I'm not going to waste your time by going over the latest updates. Good morning, Tracy. It's the same thing. A Donald Trump who says, the Iranians, we've crushed them, which is technically true. The Iranians want to negotiate. They're begging us to negotiate. But if they don't sign, we'll annihilate them. And on the other side, the Iranians, it is said, aren't talking to the Americans at all, which is true in inverted commas. Technically, as I wanted to explain yesterday, the Iranians are extremely strong when it comes to strategy. In any case, the Persians, their ancestors, invented chess, so they're very gifted at it. That's true. Technically, they're not negotiating with the Americans, they're negotiating with the Pakistanis and the Turks, who then pass the information on to the Americans. And that's how the back and forth goes. I'm warning you again, and perhaps even more so than last week, about holding a position. This weekend, we've got American troops arriving. There's talk of a landing, talk of airdrops. Well, if they've only just arrived, they'll still have a bite to eat first. It might not be for this weekend, or perhaps it's already more or less underway. We don't know, so hold your positions for 48 hours. If you want to experience a high-tension weekend, go ahead. That's no problem, but that's not how you can make a living from trading in the long term. By taking punts, you can do that with money you've already made from trading and don't need. You take that little pot and say, I'm taking punts. Or you'll see that in the long run, I've got 30 years of experience in the long run. There are 5 or 6 punts that work, but not the 7th. You're all pleased, but it wipes out the gains from the first 6 times, so you've lost. So if you want to take punts, it's more like a casino. It's more fun. The atmosphere is nicer than just sitting behind your screen, and it comes to about the same more or less for you. Alright, so preserving your capital is the most important thing. It's your oxygen. If you're a business owner, it's the foundation of your company. You're not going to risk your company's working capital over a weekend. That makes absolutely no sense. You're not a trader or a casino gambler. I've done what I consider to be my educational duty. Now we'll move on to the analysis. A more detailed look at the other indices. For the Nasdaq, that's sorted. And the S&P 500, we're seeing exactly the same pattern. But look, there's a tiny difference. That is, on the S&P 500, we haven't yet hit the lowest point of the year. As we did on Monday with the Nasdaq, the monthly support 3 has worked well. So, what do we observe? We observe that, in fact, the Nasdaq is the most affected. The S&P 500, which is inevitably impacted by the Nasdaq stocks, is falling too, but less quickly. Why is that? Because of recent events. With the price of oil and everything else, all the investors have come to terms with it. They've come to terms with it. With what? With the fact that there won't be any rate cuts this year. That's over. It's over. They were expecting 2 rate cuts, so at least a 0.5% drop in US interest rates. Now that's completely over. So why would that make the Nasdaq fall more than the S&P 500? Because the leaders of the Nasdaq, the big companies, Nvidia, Amazon, Facebook and so on, are all in on AI. And that burns through capitalization and cash reserves at the rate of hundreds of billions of dollars a year. So they borrow, they borrow, they borrow, they borrow. Money is the lifeblood of a battle. And borrowing hundreds of billions of dollars at interest rates that are more or less 1.5% is huge, because they must have made their projections assuming that US rates would drop by another 0.25, then another 0.25 in December, and so we'll be able to borrow $120 billion without any problem. If the rates are higher, we'll only be able to borrow 110 or just $100 billion. So they are particularly affected. And all the technology companies, who have to borrow, borrow and borrow again. In order not to be overtaken by the competition in AI, they have to poach the top engineer and the rival's top engineer. On the other side, to poach them, it's not just a matter of 2. A coffee and a decent bottle of wine, is it? No, there are millions of dollars involved, but you're not going to hire just anyone. You need them. You need the top 100 if you want to get ahead, to make it through the next 2 years in AI. So this rate cut, which is off the table for now, maybe next year, but in any case it's not happening this year, is going to weigh down the accounts of the big companies burning through cash, borrowing money to develop in AI. That's what explains why the S&P 500 is less affected than the Nasdaq. And in any case, we've got a nice technical rebound. If I had to bet on an upward move, it would rather be on the S&P 500, quite exceptionally actually, because technically it's in a slightly more interesting position. We've got a Dow theory, a small Dow theory, but a nice rebound on the monthly support 3. It's just a bit more appealing. We're talking about a story of 2 or 3 days. And what if there's an announcement of nuclear bombings from Iran? Well, that'd be rather amusing. In inverted commas, that's my sense of humour. I better clarify, as I have a particular sense of humour, which isn't always understood by the average internet user. There you go, let's just say it. Either way, it's funny. When I make an economics video, I'm either far left, far right, or extremely centrist. Whatever happens, there's always a group who doesn't understand the message behind it. But the message is really simple. If you have money that you can afford to lose, then go ahead. In my opinion, invest in the S&P 500, as it's less sensitive to cars, which aren't going to drop. There you go, I'm not sure the message has got through yet about the Dow Jones. Brilliant from Jose. And yeah, because, excuse me, the big companies investing in AI, it's not the Dow Jones. We're not affected by its magnificent range, and it's still holding up well at the top. Indeed, in the Dow Jones, with oil companies that are now really starting to light up their cigars, it's very interesting for them. A barrel of oil at around $100 rather than at $70 or $65, as we still had just a few months ago. So that supports the Dow Jones. It supports the Dow Jones sector. Well, is it attractive? It's really in its range. I'm in the lower part of the range, trying to bounce back. It held up well at 46,200. I would have liked to see it attempt to rebound at 46,000. That would have been much more tempting to take. But there you go, its monthly support 3 is well positioned, so the Dow Jones is solid. 500, good potential. Nasdaq. It's a bit tricky, we're getting started. As for the CAC 40, their CAC 40's dropping. Well, that's pretty normal, there's nothing unusual about that. It's struggling to get past its monthly support. That's a little more worrying. It's struggling to stabilise around 7,800, just as it struggled to stabilise at 8,000, which led to a 500-point drop in the morning. Now it's having trouble holding at 7,800. I wouldn't buy into the CAC 40, and yet, just so you know, I am a patriot, at least when it comes to French cuisine. The DAX is a bit more energetic. We can see that it's entering a range, and here it's the Dow Jones Index. Let's say European indices affected by oil prices, less so by changes in interest rates. There are fewer artificial intelligence and high-tech companies in the DAX. There you go, just look at the drop over 2 months, from 25,500 to 22,800. We've lost 1,600 points. Well, that really doesn't make you want to get involved at all. Same goes for gold. A slight, very slight rebound, but it's still taken quite a beating. Let me remind you, we were above that level. From $5,200 to $5,300, we're now at $4,400. So there as well, it's really taken a hit. It's lost, well, depending on the day, between 10 and almost 20% at its lowest point. There you go, it's back in a range. Let's leave it be. It's at last month's lowest, touching its Middle East, my only good one that's ranging quietly. We don't need it anymore. Bitcoin is trying to hold on to its monthly pivot point and last week's low around 69 to 70,000, but it's struggling. It's really struggling. This isn't the profile of a winner. So for now, I wouldn't put a single penny on Bitcoin, not even an old computer to try and mine a millionth of a Bitcoin. It's not worth it. Oil, or WTI, Texas Rangers. No, it's not Texas Rangers, but it makes me laugh. It's at $94, still under 100. Well, not bad. It's still up a little bit. It bounced off $92. There was a bit of monthly support, weekly support. It took advantage of that. We're still in the high zone for this week and in the low zone of last week. In conclusion, there's no need to panic like at Lake Geneva. It's mainly that fire. No, that lake actually. Well, listen, there you go. It's Friday. The week has gone by at an absolutely incredible speed again. Unbelievable. If you're kind, and you have every right to be kind in a tough world, don't forget to mention this channel, which brings something different. We would say always live with completely random humour, but with a trader who has 30 years experience and a member of the CME. Blah 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 blah. Well, it's still worth it all the same. On that note, lots of love, take care, ciao, have a great weekend full of good things, kisses to Aunt Martha, very important Aunt Martha. And there you have it, that's all, we're good.